What is up, everybody? Welcome to this episode of the Start, Build, Grow Show. Today, we are diving into profitability and how to manage cash flow properly in order to ensure profitability in your business. The fun stuff. We got to make money when we're building our business. So we have an awesome guest, Nate, with zero2cfo.com. He's going to be joining us here in a moment and going to be sharing how to build profitability and manage cash flow in a really challenging industry. Stay tuned. All right, everybody, welcome back. Welcome to the show. Man, I'm excited about this one because, I'm an entrepreneur. I've just kind of hustled, but I've learned some things. But one of the most important things I've learned in my life is cash flow management is the most important thing if you want to build a long-term sustainable and profitable business. And we're going to press into that today. So welcome in Nate Jenson. Thanks for joining us today, my man.
Hi, Randy. Thanks for having me. Love to be here. Looking forward to it.
Yeah, that's awesome, man. So traditional fashion, right? We want to get to know our guests a little bit here. So, right now, I mean, you're working with a number of different companies and helping them as kind of like fractional type CFO and high level financial strategy and planning and tracking and all the things. But how'd you get there, man? Let's go back a little bit and see, and share your story a little bit, how you got to where you are.
Well, the short answer is on accident, if I'm honest. I never had an intention as a young man I never had an intention to go into accounting, to go into financial management of any kind. My first business actually was a window cleaning business. So not exactly construction related, but I think there's definitely some similarities. It's obviously not as complicated as anything like a construction company or even a roofing company probably. But yeah, I was 20, I want to say I was 23 when I started that business. I was ready to take on the world. I was going to retire in 2 or 3 years of running a window cleaning business. That was my vision. And within about 2.5 years, I went out of business. And part of the reason I went out of business, actually, I hired a bookkeeping company who, made a lot of promises and then came in and sort of messed up my accounts receivable. And what would happen is I would call people who owed me money and they'd say, "We've already paid that. Why are you trying to collect from us? We already paid that." And it was damaging client relationships. And I had some debt as well. And by that point, I was just like, I can't collect money. I've got this debt and I just couldn't really do it anymore. So kind of let the thing go. So that was somewhere between 20 and 25 years ago. A few years later, I was still sort of struggling, trying to find my place in the world. And my father-in-law took pity on me. He owned a business. And he said, "Hey, Nate, do you know how to use QuickBooks?" And I said, "Well, yeah, kind of." And he said, "Do you want to come and keep my books for me?" So I went and started keeping his books part-time. Got another job, actually part-time keeping books as well. And that guy, the second guy who hired me, realized I had no clue when it came to accounting. Okay. So again, this is in my mid 20s or so. He offered to pay for an accounting class. He said, "If you go to the community college, take a class, I'll pay for it." So I went and I took cost accounting. And I fell in love with it. I was amazed. Every day I was like, I can't believe accounting can do so much for a business. I always thought it was taxes or it was, just kind of poring over numbers and spreadsheets. Well, there is a lot of that. That's true. But I was excited, right? I went to class. I'd go back to my job during the day. It was actually a door manufacturer for high-end homes. And I'm like, oh, we're doing this wrong. We got to change this. We got to, fix it. To kind of condense the story from there, I got as much education as I could. Became a certified management accountant. Got a few other credentials. I actually went back to college and I got a master's degree in forensic accounting. And when I graduated with that degree, that was 2013. I then decided to continue. At the time, I'd been freelancing, bookkeeping and controllership and so forth. And I decided at that time just to continue that and kind of build it up. Sold that company in 2015, started another company that I sold about 1.5 years ago that was bookkeeping, controllership, and CFO services. And when I sold that one, I realized I didn't really love the bookkeeping anymore. I'd done that enough. And the business that I built now is helping small business owners really to understand what drives their profitability and what drives their cash flow.
Love it. So interestingly enough, I started a window cleaning company too while I was in college.
Oh yeah, nice.
So that was my first, I guess I want to say my first official business that I actually registered and try to actually promote. And it's funny because my buddy and I were like, oh, let's just, this is summertime and in between college and my, like after my freshman year, between freshman and sophomore year of college. And I was like, let's start a window cleaning company. It can't be that hard, right? So we just went down to like, what was it, Lowe's, and bought all the whatever tools we can get, squeegees and buckets and whatever we could get. And then I happened to have a truck, and we put some ladders and spent as little as possible to get at least the baseline tools we needed. And then we went to the school, like at the university, they had like their university center where they had computers and printers. And so we went in there and printed like 300 flyers, using the school resources, and I cut them in half, the 2 pages. And then we just walked around. That was my first door knocking experience too. And we really knock a lot, but we were just like passing out flyers. And then eventually the phone rang and someone's like, hey, can you come do my windows? We're like, oh yeah, absolutely. We'll be there tomorrow. So we showed up. And I just going off because the story is kind of funny, because this is just an example of I had no clue what the heck I was doing. I didn't know the difference, from a tax perspective of like, I didn't know the difference between like a service and not having to charge sales tax and sales tax. So I get done with the job. I'm like, oh, we'll do it for $400. That's what and they're like, sure. So I get done with it. This was a service, right? At the time. So I get done with it and I'm like, oh, we're supposed to charge taxes, right? My partner's like, sure, I don't know. So I'm like, what's the tax rate? So I looked up the county we were in. I'm like, okay, it's like 7.8%. All right, cool. So I added that to it. And the homeowner just wrote the check and paid me like $435 or whatever. And I didn't know the difference at the time. So I'm charging like sales tax for a service, and goes to show, like, just start a business and figure it out, right?
Yeah. Well, you don't have to answer this on the air, but did you actually send that sales tax into the state, or did you just not know how to do that either?
I probably didn't. I probably just at the end of the day was like, what do I owe at the end of the year? And, and went that direction with the accountant I had at the time.
Nice.
It was a small little just side deal that we did, and ended up, I sold it, right, for like $2,500, first experience selling a business. Very nice. One thing I want to question I want to ask is, right, I just gave an example of who I am as a contractor. Many of us are just, hey, we got an opportunity, we got an idea, we're going to go start a business. And we don't have a lot of accounting background, or we've never really pressed in and learned how to look at P&Ls or balance sheets or those sort of things. And one thing that I've learned is in roofing and construction, accounting and bookkeeping is very different than a lot of traditional type companies that are selling products or services, those sort of things. And you mentioned cost-based accounting. Explain the difference to a blue collar guy like me, the difference between traditional accounting and cost-based accounting.
So yeah, cost-basis accounting is not where I live. Right. There's accrual basis and there's cost basis, and cost basis. I'm sorry. You saying cost basis or cash basis?
Cost basis, like cost. Yeah, I know. We're going to dive into that too. Cash and accrual. I know that part too, but cost, right? Because there's a difference in cost-based accounting and traditional accounting.
Got it. Sorry, I was going down a different rabbit hole. So cost basis, if I understand where you're coming from, I actually love that for any kind of construction company, because as long as you manage the rest of your business, you can make money, right? Now it is easy to get overburdened with different kinds of overhead where you're just too top heavy. But if you're doing cost basis and you're going to say, hey, we're going to charge you this cost plus 15%, all you've got to do is have enough business coming in the door, and you've covered your costs, plus you have 15% to run your business and take profit. So yeah, if I was understanding your question correctly, that's my
I mean, method. If only that number would actually work for a contractor, it's more definitely like probably the gross that you need to really target is probably triple that to function, because of how expensive it is for for your fixed costs in the business. But from a cost-based perspective, this is something that I think a lot of contractors, you got to learn at some point. But a lot of times, even myself, when I started my first business, construction, I was just doing projects. I was doing basement finish construction, and I basically was just tallying all the invoices, all the costs. I again went to Lowe's, I bought this, went to this, bought this. I hired a drywaller, and I just tallied it all up. And then at the end of the month, I would just say, all right, these are all the costs for all my construction. What do I have left over? And I didn't know what I was doing. That's how I ran my business. And I think there's still a lot of contractors that still kind of operate that way. But for me, it was a eureka moment after I went bankrupt in my whole story. A lot of people understand and who listen to the show or read my book kind of know that mindset ultimately led me to kind of lose everything. But the major eureka moment was, I need to know exactly what the costs are of every single job I'm doing. And I use that information to then help build out the rest of my business.
Yeah. So I like to have people think of their business in two parts. The first part is, what does it cost us to actually get the work done, right? What does it cost me to put a roof on a house? Second part is, what does it cost me to run my business? Two very different things, right? Running your business, you've got sales, you've got your administrative team or people, stuff like that. But the first part is just, what does it cost me for the wood or for the shingles, or et cetera, and for the labor to get the stuff done? And if you're not thinking of your business in those two separate pieces, you really should, because they're approached differently, right? So if you're looking at your numbers and you're saying, I'm losing money every time I put a roof on a house, well, you're underbidding, or you're not doing a cost plus or something, right? But if you say, hey, I make money on every single job, but my company still loses money at the end of the day, it's in the second part, right? Your overhead is too much. And so what I do, and we haven't talked a ton about it yet, but one of the things that I do is I build a dashboard, very simple dashboards for people to be able to see those pieces of their business. And if there's a problem in the first part, right, between revenue, cost of goods sold, and gross profit, we've got to figure out how to make our jobs profitable. If there's a problem in the second part, which is between gross profit, expenses, and net income, we've got to figure out just how to be more efficient at running our business. Sometimes the second part is solved by higher sales, right? So if you're doing one job, maybe one job isn't enough to cover all your overhead. And so by doing more jobs, you then have, more money from each of those jobs to cover those kinds of costs. But yeah, that'd be the first thing. In fact, you said before we started the call, you like to make sure we provide some kind of value, tips and tricks, things like that.
Yep.
That's my first one. Think of your business in those two sections, and understand, how are we doing on that, on the first part, on the actual delivering of our product part, versus how are we doing on the running of our business part.
Yeah. And it definitely makes sense where on the first part you mentioned, if that one, the difference from me, as I've run my business for many years, and I'm very adamant, and people know me, I'm all about like, run your business by the numbers. I teach this, I get up on stage and talk about this, and I explain COGS and variable and fixed costs and net and gross profit and margin and your run rate and all the things. But like, look at from as simple as that. You build a project. How much did it cost you? How much did you have left over on that project? Then you got to figure out, okay, what does it cost me to walk in on Monday morning to my office and turn a light switch on? Right. And when I'm consulting with somebody myself, I ask them that question. They're like, I don't know.
Yeah.
Let's start there. Figure that out.
Right.
Because if you're not doing enough jobs at the proper margin, or you could be crushing, you could be running a 40-50% margin, just crushing your jobs, but you're not doing, like you just said, you're not doing enough of them to cover the truck, the big old nice truck you just bought, and the big office you just signed a lease on, and the fancy printer you have, and
it's like some of my
gourmet
clients,
and the gourmet coffee you're serving to everybody. Like, you're not covering those costs. You're not selling enough, right?
Yeah.
I may or may not know the construction industry.
Yeah, no doubt.
And I know it because I'm that guy, right? A few months into starting my roofing company, like, I'm gonna go buy a Denali.
Right. A lot of my clients have some really nice trucks. That's for sure.
Yeah. Funny side note. Here I am. Here's just another funny story, but here I am in college, right? you know, you get to a point where you're like, okay, what I got to actually decide what my major is and what I'm going to do with my life.
Mm-hmm.
And I'm a big car guy. I've always liked cars. I've always liked trucks. I've always wanted a big truck. And like, and in marketing around the community where my college was located, there was a big boom, a lot of construction going on. I'm like, man, there's a lot of guys driving really nice trucks that have construction logos on the side. So me being the brilliant, philosopher that I am, I was like, I'm going to go into construction, because if I go to construction, I can make enough money to buy a big truck.
Right.
So here we are. Still to this day, I've always got a big truck, but hey, here we are.
It's quite the backstory.
Right. Yeah. A lot went into that decision-making process. I really analyzed it a lot.
No doubt.
Part of my ready, fire, aim mentality.
Right. Let me throw one more second tip out there, just based on what we're talking about. When I have people approach me, there's a lot of times people who haven't even started a business yet. They're like, hey, Nate, I'm thinking about starting a business. Here's my idea. What do you think? The first thing, and I've told this to quite a few people, first thing I would do at that stage, and if you don't have it even while you're in business, you should do this, is calculate a break even. Okay. So that first tip I said, we're thinking of our business in terms of, our gross profit, like what does it cost to do our actual work, and then what does it cost to run the business. A break even looks at things differently. It looks at fixed costs versus variable costs. And you mentioned, hey, maybe you're doing a great job, like you're getting a 40, 50% margin, but you need to know how many of those you have to do to cover all your fixed costs, right? And so a break-even formula, it's not super complicated. You can go look it up online, or if someone were to reach out to me, I could shoot them over the formula. I don't care. It's pretty straightforward. But you need to know what you need to sell every month, right? How much we have to invoice to break even. And the trick is just to understand the difference between your fixed costs, which are costs that are not necessarily the same month in and month out, but they're really not changed by the amount of work you do. A variable cost is a cost that changes based on how much work you do. So you pick up a new job, where you're going to be spending a lot more variable costs, right, on wood and on labor and shingles and so forth. But you need to understand, each time I pick up a job, maybe I only get to keep 30 cents on the dollar of every dollar that I invoice for. And then I have 30 cents on the dollar for all the dollars that I invoice for to cover my fixed costs. So if you don't know what your break even is on a monthly basis, you should sit down and figure that out. And again, feel free to reach out to me if you want me to help you with it. I'm not going to charge for that. It's again, pretty simple formula, but so powerful. I've had so many clients who we've done a forecast for, and they didn't understand their break even. And I'm like, look, if we do everything we're planning, then we're planning on losing whatever, like $10,000 next month or whatever, right?
Yeah.
Simply understand that before the month starts, you can make the changes you need to make sure that the next month is profitable, instead of saying, oh, let's try and make up for last month that wasn't profitable.
Yeah. Well, as an example of that, let's say you do you run the numbers and you realize that, okay, I have a couple employees and, a couple, some expenses, and it's $10,000, cost me $10,000 a month, $2,500 a week to walk in on Monday and flip a light switch on. That's what it cost me, right? It's $10,000. Let's just keep the numbers simple. And then you look at your jobs and like, okay, my average job size is, say, $5,000, and I'm making a 20%, gross at the end of the day, right? Just throwing numbers out. This isn't like, don't go home and be like, oh man, Randy's an idiot, they're making no money. But just as an example, to make this easy,
right,
is, say you're making $1,000 a job.
Yeah.
You got to do
10
jobs in a given month in order to break even.
Yeah.
And my mentor of mine, similar to what you're doing, mentor of mine he's like, the goal in business, okay, is to get through the end of the month, pay all your bills, and have $1 left over.
$1.
You can do that. If you can do that successfully, you are working in the right direction. You are building a business and you're being successful. Yeah. And it's simple and kind of funny as it is, like, it's so relevant.
Yeah.
Well, it's so important.
The thing is, you point out, right? So let's say you do 10 jobs, you make $1,000 on each, and you cover your fixed costs and you break even. Or let's say you have a good month and you have $1 left over. I've seen so many people work their butts off, especially in this industry, right? And dealing with a bunch of crap that's just, it's not worth it, right? It's like, why am I working so hard and I made almost nothing? It's so important before people look at growth, before they say, okay, I've got to get to, I've got one job making $1,000. I've got to get to 10. We should say, well, why is your margin 20%? Shouldn't it be 30% or what? Right. So we start to look at what are we doing internally that we can actually improve? Because if we can go from a 20% margin to a 30% margin, or if we can improve our running the business, efficiency, wherever we can improve internally, then when we bring on new business, we benefit a lot more from every new client or every new job that we bring on. If we're just saying, hey, we don't really know why we're profitable or how to make things more efficient, but we're just going to grow and that should solve the problems. It can work, but what tends to happen is the owner of the company tends to work a lot harder and a lot more, and they manage a lot more people, and they might make a little more money at the end of the month. Sometimes I've seen them actually not make any more money, and they're working twice as hard, even though the revenues are doubled. And so it's so critical to understand those internal numbers and understand, again, break even, understand what's your profit on each job, what's your margin, what does it cost me to turn on a light switch at the beginning of the month. If you understand all that and can fix all that, make it as efficient as you can, then the growth has a huge impact, and it has an immediate impact on the owner's income and lifestyle, really.
Yeah, absolutely. You've heard the saying, revenue is vanity, profit is sanity, and cash is the real is the real commodity, right? Is how we execute, which will kind of steer the ship a little bit over to that. I mean, in this world of construction, there's a lot of different models out there, right? However, the whole industry is notorious for having long conversion cycles for cash.
Yeah.
It takes a long time to get paid.
Yes.
Whatever. It's just in general. I mean, I remember even back in the day when it was, I was doing basement finish and remodels, it would take me 8 weeks to complete an okay sized project. And you might be getting some payments along the way, but that last little bit, which is all your profit, could take another 60 days, right, to get paid, depending on your client and what the contract is. And then a lot of our clients, and myself included, we have roofing companies and we work in the insurance world. So we're kind of at the mercy of mortgage companies and insurance companies and supplements and all the things that take a long time. And when I'm working with a client, I'll ask somebody, when we're looking at like, how do I fix this business? How do I grow my business and how do I become more profitable? I think one of the numbers that people don't think about enough is time, or DSO, right? The cash conversion cycle.
For sure.
How long, when I like to break it down, when I'm paying somebody, right, to sit at a desk to answer a phone, when that lead comes in, technically, if you really want to find minute on this, I've incurred a cost. Even before that, I incurred a cost because I paid for marketing to get the person to call the lead, right? So I don't want to get that far into it, but once a job becomes, you start incurring costs on a job, it goes into production and you're ordering materials, you pull a permit or something, you're starting to incur cost from that time until the time you recognize your profit. Do you have some strategies on how to like observe that and how to make and really help identify that concept to where it can help us, improve cash flow in our business?
Job Limits is a fully customizable back office solution.
Track leads, jobs, tasks from one easy-to-use software.
And with the largest ecosystem of integrated partners, if we don't do it, we have a friend who does.
Learn how the #1 back office system in roofing
can help you be efficient, be organized, be professional, and be profitable.
From day one, it was just shockingly different.
They did such a great job.
Extremely happy.
I have a salesperson that works 24/7.
We've worked with a lot of different agencies over the years, and I think we found, just like most people in this room probably, that they're extremely frustrating, really annoying. Tim and his company is just light years apart from anybody we've ever experienced.
Honor of the late and great Nick Harris.
I threw at her and went, she just took on what going. Welcome to the show.
Yes, I've got a few tips related to that. I don't know if it's so much as identifying that concept as, hey, as soon as the job's, as soon as they sign the contract, I'm incurring costs. That's true, but it's a little too granular, I think, to manage super well. But here's my approach. The first thing people need to understand about cash flow is that they need to measure it, and that can be measuring, for example, what is the average number of days it takes to collect our accounts receivable, and am I taking steps to improve that number? I wish we could do a poll on your podcast and see how many people could give me that number off the top of their head. Oh, it's 59 days as of last month or whatever. Simply measuring it and keeping an eye on it is going to be the first step. I'll give you a quick example. I had a client, brand new client, about a year ago now, I want to say. His first thing he said to me is it seems like we're running a really good business, but we never have any cash. Every job seems to be profitable. We think we're pretty efficient, but we just have trouble collecting, and it just seems we're always behind on paying our bills. And so, very simply, he was on QuickBooks desktop, right? I went to his QuickBooks, ran an AR report, and I said, here's your AR report. Are you aware that like a fourth of your AR is over 90 days? And he's like, yeah, but that's just kind of how we've been running. But it stays about that percentage. I'm like, okay, let's change it. And I opened up the report. So the standard report is like, it's current 1 to 30 days, 30 to 60 days, 60 to 90 days, and then over 90 days. Mm-hmm. Well, I extend that out, and so I said, okay, we're now at 90 days, 120 days, 150. So he could see all these different time periods. And not only was a fourth of his AR over 90 days, but nearly a fourth of his AR was almost a year old or older. Mm. And he had no idea, right? He just had no idea that he had clients that he was still doing work for, right? These are big. He was I'm not going to tell you what kind of work he did, just in case, anyway.
In the service business.
Yeah, anybody tries to track him down or something. But he had big clients who used him repeatedly, and he was still doing work for them. And they, like, one client might owe him 50 grand or more. And they're still doing work for this client who, on at least 1 or 2 invoices totaling 50 grand, they haven't paid him in a year. And so all that story just to say, you need to understand how old your AR really is. You need to understand what your average collection period really is. And if there are particular clients who are, particularly offensive in the sense of not paying you for a long, long time, make sure you're managing that relationship. If you're still doing work for them, it can be tough, right? This particular client, he's like, hey, we actually do get business from them, and we do get paid occasionally on stuff. And so he's trying to figure out, how do I collect this really old stuff without being a jerk and souring the client relationship? And it's kind of tough. But the number one error that I see in that space is people they really don't know their numbers. They really don't know what it's taking to collect, how long it takes to collect.
Yep.
With that, kind of on top of that, one thing that they should measure, which isn't technically a measure, but they should forecast it. One of the things I love to do is build forecasts. I know I'm not a roofer. I'm an accounting guy. But I'll do 2 types of forecasts. One is like a P&L forecast, right? Are we planning on making money in the next 3 months, 6 months, 12 months? But the other one is a cash forecast. And it's usually about 8 to 12 weeks out. And we can see, hey, here's the money we're expecting to collect. Here's the money we're expecting to expend on payroll and jobs and office, coffee or whatever. Here's the money we're expecting to go out. And you can see week by week by week what's your bank account balance expected to be at the end of that week. And it's so great, because if you've ever walked into your office on, let's say it's a Monday and it's time to run payroll for Friday, and you don't quite have enough cash, like your stomach drops out. I've been there. It's no fun, right?
Yep.
Because you have no options. It's like, okay, I've got to pull money out of my own pocket if I've got it to put it in the company so I can get my people paid, or I've got to spend all day on the phone calling people who owe me money, telling them I need a check today and can I come pick it up? And that's not a very productive way to spend your day. But if you have this forecast and you're like, oh, 3 weeks from now I'm running out of money, you got 3 weeks. Okay, I'm still going to call my clients who owe me money, but I also have the option of slow paying vendors or slow paying a credit card, or managing my cash differently, using a line of credit, if I have one. I have a lot of options. I have a lot of time to figure that out. And so that cash forecast, if you don't have one, that's one of the, in terms of managing cash, that's one of the biggest things I would say is you should know, again, 8 weeks to 12 weeks out, at least what you expect is going to happen with your bank balance. Where's your cash going and coming from? And you can see it. It's boom, boom, week after week. Oh, week 3 or week 4 or week 5. That's where my issue is. What can I do between now and then to bridge that gap?
Yeah. And it sounds simple, but it's in this industry, that's like, there's somebody out there like, oh crap, what am I doing wrong? You know what I mean? But I want to like reinforce that this goes to show that you want to be successful, like as an entrepreneur, a visionary in your business, like you're not expected to be the person behind a computer, like figuring all this out.
Yeah.
Right.
Yeah.
Hire a professional, find someone, like a Nate or somebody out there that knows this stuff inside and out, that can help you build a cadence around doing these things.
Yeah.
Right. A lot of us, a lot of the majority of the roofing industry are, sub $3 million, right? 0 to $3 million. And you can build it. That's a successful business. It's a good business, but everybody wants to be 5. They want to be 10. They want to be $20 million. And the reality of it is sometimes you can catch lightning in a bottle and you can hack your way to those levels. But when you get to 3, 5, 10 million plus as a company, this is like absolutely crucial.
Oh yeah.
And as we try to look at it from a perspective of, like, we do this every week. We call it the CPR. It's a critical profit report. And this is how much is coming in, how much do I owe, how much am I expected to pay out, and how much have I actually collected, right? How much have I collected? How much do I expect to collect? How much have I paid? And how much do I expect to pay?
Yeah.
And if you know those 4 numbers, you can now start to, that's the premise of this forecasting model,
Absolutely.
right? I mean,
yeah.
Knowing that it's not that hard to get that information. Ask whoever's doing invoicing, how much did you invoice this week?
Right.
And how much did that add to the invoices that were not collected? How many invoices were collected this week? You've got to have someone on your team to help gather this data, because the data helps you make decisions.
Absolutely.
And that's our job as entrepreneurs, right? We got to make good, solid decisions.
Yeah. I tell people all the time, like 95% of your data analysis is in your data entry, right? If you've got somebody that's putting in invoices correctly, who's putting in bills correctly, it's very easy for someone like me to pull that data out and be like, oh, here's where you're going. And so you've got to have that front end entry, happening correctly, happening efficiently, and happening timely, right?
Yeah.
You can't wait till the end of the month and have someone throw everything in your books. If you need to know every week how much money's in the bank, because there's no way to run a business like that.
Or God forbid, you're trying to do it yourself, right? And it's like the end of the month at midnight and you're like half asleep after working a 15-hour day. You're like, oh man, I got to check my invoices and see what kind of, see where my books are. And it gets really ugly pretty quick.
Let me tell you a kind of cautionary tale. I had a client who I had for 1 month. He called me. He needed obviously some financial help, signed up, and we got to work. And the reason it only lasted 1 month is there really wasn't much I could do for him, because it had gotten to a point where he had no cash coming in. I want to say he had like 5 open jobs who, technically owed him money, but they were all waiting on him to finish a certain piece of the job before they would make the next payment. He had put off his vendors for too long, and so nobody would actually ship material for him to rolls of carpet to install other kinds of lumber or whatever. They wouldn't supply him the material, so he was caught where he couldn't get material to finish these next stages, but he couldn't get money until he finished these next stages, so he was stuck. And I said, hey, do you have a credit card? Like, put that. I knew he had a credit card. I'm like, take your credit card and put the carpet on your card so you can at least kind of grease the wheels and have something moving. And he's like, I can't. My card's maxed out. I don't have any money on it left. And I'm like, at that point, look, you've got too many people who need your money. Nobody who's giving you money. You don't have any more credit available to you, and it's just too late, right? So if someone's feeling a little bit pinched and they can't identify where their cash is moving, again, where it's coming from or where it's supposed to be going, with some sense of accuracy and knowing the timeframes of those inflows and outflows. I would say that's maybe, I think we've given a few tips already, but that's maybe the number one thing you should start on is I need to know where my cash is coming from, because that's the one thing that is going to shut you down faster than anything else, is when you run out of money and you run out of sources to get new money in.
Yeah. It's be aware of it. Right. And as that one hits home, man, because that's the exact position I found myself in. And it's there's definitely ownership I got to take, because I was trying to wear all the hats and do all the things and write all the checks and do all the things. The market shifted. I didn't pay attention to that. And I kind of was a dumbass and got myself into trouble, some legal trouble outside of work, which cost me a bunch of money, which I had to leverage the cash in my company to pay for my lawyers when I was a young kid acting like an idiot. And all that stuff compiled on top of each other. You get yourself into a place where what do you do? Ultimately that's what I had to kind of file and reset the business. And I'm glad it happened early, because I learned some incredible lessons to that project. So that's why, if you're listening to this, please pay attention and understand, like, I wouldn't wish that pressure on my worst enemy.
Yeah. Well, Randy, there's something in this industry, and it's honestly, it's probably what you started with, right? Is that it takes so long sometimes to get paid, that if you're not prepared for that, you're going to spend all your money, then you're going to spend all your credit. And if you're still waiting to get paid, you're out of business. And so you really need to understand where and when your money is coming in.
Absolutely.
Yeah.
And there's a fallacy out there too. I can't even believe that to even say this, but there's, industry gurus that even will tell you that sales cures everything. All you got to do is go sell more and sell more and sell more. No, you're compounding the problem.
Yeah.
If you don't have good cash flow management systems in place. Now you're adding zeros and commas to what you owe and the lack of money you don't have. Sales does not cure everything. Systems is a great place to start. So I gotta, kind of shift gears a little bit here, but we're going to start to land the plane. Man, I've learned to really nerd out on this stuff. Right. Early on in my career, I was like, forget that. I'm just gonna go sell roofs and make things happen and hire people and be a mover and a shaker. But now I'm like, okay, all my businesses, I'm like, it's like cash first, and really pay attention to this sort of thing. Because here's the thing. We all are chasing that one thing. If you're listening to this show, you probably can relate to this, especially if you listen for a while. We have 300 episodes. If you like the show, make sure to, this is a good segue, make sure to subscribe. Click the button, subscribe on the YouTube channel. It really helps us out. And, he mentioned earlier, throw a comment in there. Do you know how long it takes to collect your jobs? What is that number? Or do you know that, or do you not know that? Go ahead and throw a comment in there. Let's have a discussion about that. But totally just lost my track. What was I saying? Help me out here.
You said you were going to change tracks, and then apparently tried to change.
Okay, I shifted back there. Squirrel. Okay, so here's what we're going to do. And one of the things that, as we start to kind of land the plane here, we bring on different experts, and you're an expert in your field. We call this like kind of the golden nugget. But the question for you is, what's the number one thing contractors can do to improve their cash flow and profitability?
Well, we've touched on a lot of it already. I would just maybe reiterate, you have to measure it. What often happens is somebody in my seat who thinks a lot about accounting, and they sort of forget what other people maybe don't know about accounting because we've been in it so long. They will tend to talk in accounting terms, and they will tend to, they'll want to show you your profit and loss and your balance sheet. And some people in the construction industry particularly actually sort of feel like, well, do I need to go get a degree in accounting to understand all these reports, to understand what you're telling me? You have to measure your numbers, which includes cash flow, which includes your break even, which includes all your different profitability metrics that you should know. But you need a simple way to do it. And that's, I'll use a segue as well. That's what I do, right? I build dashboards, and I connect people back to their data in a way that's clear and simple. So they can look at a chart and be like, oh, sales are up, sales are down. This metric is up or down. It's on or off target. And so then once you know if something's off target, that's where you need to fix, right? That's where to focus. And so the number one thing is you need to be connected to your data. You need to measure whatever metrics matter in your business, and you need to look at those frequently, because those will tell you exactly where you're having issues, whether it's cash flow or profitability or whatever.
I love it. The answers are in the numbers, right? Where they say what's trackable is measurable, and what's measurable can help you make decisions. Awesome. So on that note, how do I get a hold of you, my man? If I want to carry on the conversation, I want to ask you some questions, or you're kind of, maybe press in a little bit more on my numbers and get a dashboard maybe, or do something. How do I get a hold of you? What's the best way to connect with you, my man?
The easiest way is my website, zerotocfo.com, and it's all spelled out, ZEROTO, CFO.com. There's a button to contact me there. I would love if anybody, like if this has resonated with anybody, I would at least recommend go on my website. There's a video right at the top. It's about 3 minutes, and it explains very clearly how connecting you to your data lets you make decisions for your business. And whether you use me for that or not, it's like, oh, I think it'll help people see, oh, that's kind of how I do it. I have a target, I have an actual, I look at the difference, and I figure out what caused that difference. So anyway, very long answer to your question, but it's www.zerotocfo.com.
zerotocfo.com. That's awesome. And as always, this show wouldn't be possible with our amazing partners and sponsors, and talking about tracking data and having all that stuff at your fingertips. Obviously, QuickBooks is important, but they don't necessarily write me a check or are interested in the show. However, JobNimbus is the #1 CRM in the roofing industry, and growing rapidly even outside of roofing. And that is an incredible way to track your data and make sure that everything that is trackable is tracked, and is measurable is measured, to give an expert like Nate the tools he needs to then help you manage your cash flow, and grow your profitability. So check out jobnimbus.com. All right, Nate, we're gonna carry one more out here.
Okay.
You run a business.
Yeah.
Hit me with a golden nugget. What's right off the bat, right? I'm gonna throw you right to the wolves. What is the best piece of business advice that you could give, or maybe that you've received by a mentor of yours?
That is throwing me to the wolves. I've received a lot. I've read a lot. For me, I'll say something as it relates to this, to the topic that we've been discussing here. It was a friend of mine, maybe, it's less than 10 years ago. And he was a consultant for a company. He actually brought me in to do some financial consulting. And as we were talking, he said something very simple, but it was kind of profound for me at the time. He said, a number by itself doesn't mean anything. You either need to know what that number used to be or what that number should be. Because if you said, hey, I made 10 grand this month. Well, what if last month you made 100 grand? Then 10 grand's terrible. But if last month you made nothing, 10 grand's not bad. And so understanding not just the number, but what is that number supposed to be? That's going to give you a lot more understanding as to what needs to be fixed.
I love that. I'm going to take that one home myself, brother. Hey,
Great.
Thank you so much for joining. Hey, if you're listening to this, I appreciate you. Thank you so much for joining, for listening to the podcast, whatever platform you're on. If you're watching us on YouTube, if you're listening on Spotify or iTunes or any one of those things, do us a huge favor. It really helps tremendously with our viewership and our mission to serve this industry and deliver value. If you just click the little button and subscribe, and make sure to check out some of the other shows. We've had almost 300 shows now, and there's an incredible amount of free content that you can consume. Thank you so much. Give us a comment, DM me, hit up Nate, and let's carry on the conversation. We appreciate you. We're grateful for you. Take care, everybody. God bless.